So what I've introduced are some main new features to the Position Trader EA. So first one is only take new signals once per day, this input here. So it's not an issue with the Position Trader EA at the moment, but there's an issue if you use the auto trading strategy for ADR and RSI both set to true. This used to say use only one, right? It doesn't now, because you can use both if you want to. With this set to true, what will happen is if price pushes above RSI and above ADR and you get a signal, it used to take 2 trades. Now it doesn't. It will only take 1 trade, yeah, on those. And the other issue we had with the ADR reversal specifically was if it pushed above ADR and somebody was using ADR reversal scalping and they took profit and then you got another signal, it would take a second ADR reversal down here somewhere. This now means that that won't happen. So let me show you an example quickly, which will obviously explain it. This is version 1.9, the old version. Which basically, was it the pound US dollar? Euro US dollar? I can't remember what currency it was. I was testing on. No, I think it was pound US dollar. Hang on, let me switch over to pound US. And it was on a low time frame. It was on M5. So the old version, what happened was when you got an ADR reversal like this, it would take a trade. Yeah, you see it's taken 2 trades. It's taken an ADR reversal and an RSI reversal because they both triggered at the same time. Yeah, and then price pushes down, we take profit, and then it takes another RSI and another ADR because RSI at that point there was still extended and ADR has also been hit. So the problem was it would duplicate trades, which sometimes is great. Yeah, if it does this, boom, continues down, fantastic. You've taken 4 trades, you've made 4 profitable trades. Brilliant. And now you're flipping in long on the ADR reversal. Excellent. Let's see if that one works out as well. Yes, great. So one day, 5 trades, in, out, 100% strike rate. Fantastic. But on days where it goes like that, and then it goes like that, and then it flies off for 2 days, you will be in drawdown on that second trade. Most people, and this isn't part of the strategy I originally created, most people don't want that second trade. So the new version of the EA removes that. If it's set to trade once per day, it will take 1 trade only on 1 strategy. It will trade. If it hits target, it goes, thank you very much, I'm done. Yeah, which is what it should have done in the first place. So it's kind of a little bug, but it's not a bug because it's doing what it was told to do. So there's a logic change there. So if you run exactly the same thing on version 2 of the EA, which is this one here, and we take the same price action. Yeah, we've taken 1 trade, but RSI entry short. Yeah, the other one took an RSI and an ADR. So it's taken 1 trade. Yeah, and it's taken a second trade, but it's only taken 1 RSI. It hasn't taken a duplicate, hasn't taken 2 trades. Yeah, and then it's going to take its third. Now, if we set this to true here, only take new signal trades once per day, what will happen now is it will take that RSI short and it won't take the second one. Yeah. There we go. So we're in, we're out, no additional trades. Yeah. So that second trade short has not been taken. It is taking this one because it's a long. It's a totally different one. This is an ADR long. That is an RSI short. So in the same day, RSI has pushed up. We've hit ADR. We've hit RSI. We've taken an RSI short. It's pushed down and it's gone beyond 1 ADR to the downside. So now we're taking an ADR reversal to the upside. Yeah. So it's doing exactly what it should be doing. This is what it should have done really in the first place. This is how I would trade when I was trading manually. So it's kind of fixed a bug, but the bug was actually very profitable. So what I've done is I've created it as an input so that you can have it turned off, because your set files will have been working on the old logic. Second thing that people have been requesting from the market reversal alert CA is the multiple of ADR for stop calculation was fixed at 1 in the market reversal alert CA. You could alter that, so now you can. So if you want to do risk over half an ADR instead of 1 ADR, you can do that now. Yeah. So percent to risk over ADR stop multiple. This is your ADR stop multiple. So now you can adjust your risk. The other reason I now need this input is because you don't have to position trade with the Position Trader EA. Call me stupid, but you can. So you can use stop losses if you want. Yeah. So if you want to use those things that lose you money, feel free. A lot of people do, specifically scalpers. But there we go. So if we take an ADR short, an RSI short, yeah, there's a stop loss. Look. So instead of, if price pushes up, you take a second position, and when it comes down, you make a profit. Now, if price pushes up, you lose your money. So it's off by default. But if you want to do stop loss trading, you've now got that option as well. Yeah. And I understand some people that are trading. Look at it. Right. So this is a great example. Look, ADR reversal strategy. In, out, in, out, in, out, in, out. 4 trades, 4 profits. But that's because the ADR reversal worked and you're scalping tiny bits of money. A lot of people are doing this. They're scalping with the EA, and I didn't realize they were. So having this stop loss functionality where you can take multiple trades when you're at ADR, assuming that the ADR reversal is going to work, is actually very profitable. So there's some set files that are worth investigating with this new functionality. But anyway, so that's your stop losses. So now you can use stop losses if you want to. The default is true because it's a position trading EA. It's designed for position trading. Therefore, we do not use stops. So it will place your stops and then it will remove your stops. But only on normal entries, not on aggressive drawdown control. Any aggressive drawdown control entries that you use here in this section, they will always use a stop loss. They will never be removed. If you're getting in with 75% of your total portfolio position in one direction, you need to stop if it doesn't work, because if it doesn't work, you will blow your account. So they will not have stop losses removed on aggressive drawdown control. Another change that is made is to implement the same functionality for RSI as we have at the moment for ADR. So with RSI, you have the option when RSI is extended above a level, the close of the signal candle has to be above the level for the trade to be taken. If it pushes above RSI, and by the time the signal has happened, we are below RSI, it can or cannot take a trade. You have the option. So this is a stronger signal with it set to true, because it means price has gone way above and signaled above the line. Yeah, very strong push, very strong pullback coming. So that is now available for ADR. So if you set ADR 100, we have the option now, as it works at the moment, for if it taps into ADR and then comes down and signals, you get in here, ADR is there, your entry is there. If you set that to true, what will happen is now it has to be above ADR, and the signal candle close has to be above the ADR level for a trade to be taken. Stronger stronger ADR reversals. So a bigger, stronger push before we get in. Which brings me on to the next change, which is a biggie, which is signals. So we had in the Position Trader EA just the one signal. I simplified the whole position trading strategy down into using a moving average. So we were basically saying you can pick a moving average, whichever one you want. If we open below it and close above it, we go long. If we open above it, we close below it, we go short, assuming the conditions of the strategy are met. What I've introduced now is 2 additional signal types. So a lot of people didn't want to use moving averages because they love the market reversal alert indicator, which I understand, it's brilliant. It does signal very, very strong reversals. However, the downside to the market reversal alert indicator is it misses a lot of movement sometimes. Prime example. Yeah, there's your reversal alert. There's your M pattern retest happening. There's your short. Now, if you get in on my moving average version, you were entered there. The market reversal alert EA entered there. Yeah, so that was your entry with market reversal alerts EA. That is your entry with the position trader EA. You now have the option, if you want to use a market reversal alert in the position trader EA as well. Okay, so all that happens is I have simplified the logic down for this. Let me just turn that on, reversal alert, and I'll turn off the moving average signal. So what you'll see basically is when we get to the high or the low of the day, let me just put period separators on a minute. Yeah, so we're at the high of the day here. Normally what you would have is you would have the market reversal alert indicator showing there, and it would start to signal some entries. However, there's no condition met. We have not hit RSI, we have not hit ADR. Therefore, there's no point in showing you the market reversal alert because we're not taking a trade because we haven't hit the conditions of the signal. So what happens is when we get the condition of the signal, the condition of the strategy met, which is either an RSI or an ADR extension, when we get one, RSI, there we go. So we've got an RSI now. So what will happen now is it will start to draw in the reversal alert. Okay, so there's your reversal alert. Okay, this is part of the reason that I did not incorporate this into the position trader EA, because look at that massive rally. Sometimes when you get ADR reversals, a lot of the time when you get ADR reversals, they're off the back of news. The rally is so hard, there is no selling in it. Therefore, the reversal alert is actually miles away from the actual ADR entry. By the time you get that reversal alert signal, you've missed 50% of the move. The moving average entry, however, will get you in much, much closer. Yeah, that's a 5, but you know, 5 or a 9 doesn't matter. Yeah, so your entry was there with the 5. The 9, your entry was probably there or there. Yeah, one or the other, but it's roughly the same place. So it's a better entry with a moving average, but the downside of obviously is it gets you in quicker with less confirmation. The reversal alert is a confirmation because the selling price action is actually being validated by additional selling. The buyers lost, the sellers regained control, which is what a reversal alert is. It's a structure break, market structure. So that's now incorporated, and if I let that just run out, you'll see, there we go, there's your reversal alert. So there's your ADR entry short with a reversal alert. However, ADR was all the way up there. So you've now got the option to say, I only want to take trades above ADR, and the close of the reversal alert has to also be above ADR. So they're going to be much, much stronger signals to take. Yeah, so that's basically the way that the reversal alerts work. It will only show if the high of the day is achieved with an ADR hit or an RSI hit. That will always be the case because you can't hit RSI or ADR without creating a new high of the day. Obvious, yeah, because it has to push hard to get a market condition met. Therefore, you're going to have a signal on a market reversal alert. The two cannot happen without each other. So that's the reversal alert. You also now have a third entry signal, which is my favorite price action signal, apart from the market reversal alert, which is the 3-bar reversal. So where are we? Where's the entry criteria? There. MA, oh, that's because I've renamed it. So let me just reset. I won't reset it, but that won't say that. That will say entry signal settings. It's because I've loaded a set file that had the old text in it. That would say entry signal settings. Use a 3-bar reversal. Okay, so a 3-bar reversal, for those that do not know, if you're in the member stream, you know exactly what I'm talking about because we've done multiple sessions on it. Is basically a very, very strong reversal pattern. Let's just find one. Let's just let the EA take one, and then we'll show you the actual pattern. Okay, so that is a 3-bar reversal. So it's a 3-bar pattern. It's very well known. Most people will probably know it already. It's basically a push, a pause, and a pull, or a pull, a pause, and a push. Yeah. So basically what it is exhaustion in the market and the opposite party taking control. So from a bank or institutional perspective, what this is the not the deviation, what's the word I'm looking for? The balance in power, basically, between buyers and sellers shifting. So the buyers basically have been in control of the market, and what is happening is they have run out of steam. So you get a final buy candle, followed by an indecision candle, which is where there is neutrality between buyers and sellers, and then the opposite party takes control of the market. A 3-bar reversal, push, pause, pull. So there's a push in price, a pause in price, and then a pull, and opposite the other way around. So this here is a push, a pause, and a pull. Yeah. So the conditions of a 3-bar reversal are, you need a, let's find a better one, because normally they're better at the top or bottom of a move. So let's just find a better reversal. Sure, there'll be one soon. He says as the market goes sideways for weeks on end. Right, so there's an ADR reversal. That's not a great one either. I just want to find a perfect kind of example at the right spot, basically. There we go. That's a good one. Perfect. So this is a perfect sort of 3-bar reversal. So it appears at the top of a move. Where the hell was it? There. There we go. So we've got a push up in price, a pause, and a pull. Yeah. So basically the rules are the push candle has to have a wick no bigger than, for me personally, and you can define your own rules in the EA, but for me personally, that wick cannot be more than 30% of the candle. Yeah. If there is a massive, if this is a green candle like this and the wick is 80% of the candle, that's not part of a 3-bar reversal. So I've set conditions basically where you can define the height of that wick. You can also define the height of that wick. For me personally, that wick can be no more than 20%. Yeah. So I want to see a nice big wick rejection there. We need a big rejection. And then the bear move, first rule is this close here has to be below the close of that candle. And then the second rule is this wick here cannot be more than 30% of the candle. Yeah. So what we're looking for is a push up where we've had strong buying price action. There's not a lot of selling price action in the candle. Therefore, there's not a big wick. The second candle has to have a big wick. Yeah. Because we want rejection. We want the buyers to have tried to continue this move, but failed. Therefore, there's a big wick because the sellers are taking control of that candle more than the buyers have, or at least equilibrium. The third candle, we want it to have pushed down very hard, and we do not want much buy-in price action. So the wick on the bottom of this candle has to close below that candle, and it has to have a very small amount of buyers in it. So that is a perfect 3-bar reversal, yeah? And that was taken at ADR. So price is pushed up to ADR. Yeah. Oops. So we've pushed up, we've hit ADR, and sellers have taken control of the market above ADR. We've taken the trade, yeah? So that's the third condition. So in the inputs, what you have is, under the entry signals, you've got candle 3 wick maximum, candle 2 wick minimum, and candle 1 wick maximum. So as I said, candle 3 is that one, candle 2 is the middle one, candle 1 is the most recent. So candle 3, the push, cannot have more than 30% wick. Candle 2 has to have a minimum of 20% wick. So I want at least 20% selling price action. You can make that bigger, up to you. But sometimes what you do is you get a doji like that. And personally, I found in my testing that 20% is kind of a decent level. It's just basically looking for a double rejection. So candle 3 and candle 2, you just want wicks on them, which basically means buyers got beaten. Buyers got beaten. Sellers took control. 3-bar reversal. It's very simple. And then the third candle, which is, candle 1, the wick maximum percent is 30. And that applies to the downside wick on the candle. This downside bit. Yeah. So big, strong down candle, basically, is all we're saying. So there you go. So that's the new signal settings. So the other great thing about the signal settings is you can select all 3. Yeah. So at the moment, what will happen is when we get above ADR or RSI, if you set all three true, what it will do is it will take the first one that signals. Yeah. So if you want to use a moving average, you can use a moving average. But if you get a 3-bar reversal before it gets to the moving average, it will take a 3-bar reversal. The market reversal alert will always be the last one. The market reversal alert is the confirmation signal. It's the stronger signal because price has already confirmed that the sellers are in control. Before that, you will get a 3-bar reversal at the very peak of the move, followed by a moving average cross, followed by a reversal alert. Yeah. So if you set it to true on all three, most of the time you will take 3-bar reversals if the price pattern exists. If it pushes into accumulation and does not give a 3-bar reversal, the moving average will catch up with the accumulation and you will take a moving average cross. You will always get the market reversal alert after one of those two, unless it just basically goes like that and then boom. Then obviously all three will trigger at exactly the same time, but it will only trade once on those signals. So for me, my personal preference would be to not use the moving average cross. It would be to use a market reversal alert, which means that if we get a nice tight reversal alert, excellent, that's what I want. I want confirmation of sellers taking control of the market. But if before we get the reversal alert, we get a 3-bar pattern showing us that the sellers look like they're getting in now, I'll get that first. Yeah. So for me, it would be setting both of those to true, but that is another backup. So you've got 3 options. You can use all of them, a combination of 1, 2, or 3 of them, or whatever you want, basically. Yeah. So that's the additional entries. It's going to open up an awful lot more doors for people to trade the position trader EA that don't want to use ADR and RSI reversal signals, and people that are using the buttons to trade when they find their own strategies. Most strategies will use some kind of reversal pattern in mean reversion, obviously. So if it's not a moving average cross, it'll be a price action candlestick pattern. The 3-bar reversal you can tweak with the wick sizes to make whatever you want. So you could actually make that easily, use hammers and shooting stars as well. So you can adjust the price action candlestick patterns. But you know, if you're taking single candlestick patterns like a shooting star like that, yeah, how perfect is that? Look, talk about explain exactly what I was going to explain on the chart. So you know, some people look for that on its own is great, but it is just 5 minutes worth of price action. This, a push, a pause, and a pull, is a better confirmation. And look what you got as well, a moving average cross before the reversal alert. Yeah, so the reversal alert's always last. The moving average cross, either there, it would be there in this case. Reversal alert is there. Moving average cross is there. 3-bar reversal is exactly the same candlestick as the moving average, but it is a stronger price confirmation.